Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were using 57 to 59 as overnight support, and holding above it would tell us that buyers are pretty active here, and that would bring the breakdown area from yesterday into place. Right now in the overnight session, that scenario seems to be playing out, and now on the upside, the main inflection point is the 65 to 67.5 initial resistance zone. That's the spot where the down move started yesterday. It's an important area in the market. And given that the main catalyst today is FOMC minutes out at 1 p.m. Central, I think that sellers could be active on first test of 65 to 67.5. And we could even see a failure right at initial resistance for a rotation back down to the prior close, 60.5, and then initial support at 56.75 to 58.75. Now we are going to have to gauge, kind of how price actually gets up to 65, 67.5, how much momentum we're seeing in the other markets, how the market internals are shaping up to really decide whether we fade that zone. But, the first test of that area, I do expect some sort of sell response. And then if the sell response is not that great, and it's just kind of a, 1.5, 2 point pullback, and then we start balancing, then you know that there's some pretty decent momentum in this market, and we could go up and tag the naked VPOC at 69.75 and fill the gap at 1971. But then that would be yet another area where sellers could step in. So 70.5 to 72.5 would be another spot where sellers could be active and then rotate ES back down to the 65 to 67.5 zone. And because FOMC minutes is a major catalyst this afternoon, there's really not much else going on the economic calendar. I'm not expecting a straight line move one way or the other. So the idea is that, as ES goes up and tests initial resistance, there's potential for failure, or at the very minimum, at least some sort of sell response. And from there, if we fail, then we can come back down, fill the gap at 60.5, and tag initial support 56.75 to 58.75. Buyers could maintain ES above initial support, but again, that's a zone where we are going to have to gauge how the market is shaping up in real time, because it's very much middle of range, right? It's not a range extreme, and it's not the edge of balance. And because of that, the market, if it's weak, could head lower and test this 52 to 54 zone again, and then we get a buy response, right? So we will have to be careful on the long side at the initial support zone, just because it is the middle of range, and we could extend a bit lower, perhaps maybe down to 55.75, and then we get some buyers in the market. And same idea over here. If we come down to 52, even if the zone gets extended by a couple of ticks, and we go down to 51.5, that's okay. The idea is that overall, we should not see the market just slice through the bull bear zone. The only time that our overall market bias would shift from buyers in control, bigger picture, to now control being shifted over to the sell side is if we saw a high momentum, high volume breakdown below 52 to 54. In that case, sellers could then be in firm control, and we could see a extended push lower. But a move like that will probably only even be possible after FOMC minutes and not ahead of it. Ahead of it, I'm expecting just some rotational type, range-bound price action where there's really not a whole lot of continuation, and moves can basically end abruptly at any of these resistance zone up here. And same idea on the downside. Even a downside push could actually end near the bottom of initial support, or maybe even a little bit lower, and then we just rotate and we kind of balance in a range heading into FOMC minutes, and then that could be a potential catalyst to put in a directional type push. But bigger picture, we know that the market is still maintaining an uptrend. We can see that there's a pretty defined range over here from roughly the 52, 53 area all the way up to the all-time highs. And right now the market is basically figuring out which way it's going to go. But until it breaks outside of this range, we still have to give more edge to the buyers when we approach the bottom of the range. And because there's no big catalyst to drive the market to yet another all-time high, we know that we can expect some profit taking as we get closer to the top of the range. So right now the main idea is that we're probably going to be range bound, and it's just a matter of where that range gets established. The main idea so far is that, sellers will be active on pops into resistance, buyers can be active on pullbacks into support. 52, 54 is the major, zone within this range, and as long as we hold above it, we can continue being range bound and then perhaps even go back up to the all-time highs. Holding above initial support would just confirm that the buyers are still fairly active here, and we're not in this all-out bearish market. So right now the market direction and the directional bias is neutral. We're open to short positions at the resistance zones and long positions on pullbacks. And the deeper pullbacks will offer us better reward to risk. Initial support, good place to cover if you end up taking a short off of some of these higher prices. Not necessarily the best spot to get long unless we're seeing some pretty clear signs that the market is fairly strong. If the market internals are holding up quite well and the other markets are holding up quite well, then it could be a good long setup, but that needs to be gauged in real time. So those are the main ideas heading into the open. Let's see how well the buyers hold it up overall within this range, and then let's see if sellers can step in on any pops into these resistance zones, and we'll take it from there.